our journey that we underwent complete brand transformation with the name of Websol. Now we are called as Websol. You can see some of the highlights of our company. We are having 20 plus years of experience in the industry. We are having over 500 plus of enterprise customers. We are present in 2000 plus service locations in India. You can see some of the promising awards that we have received. India's number one MPS company, 20 most promising DMS solution provider. You can see some of the trusted clients that we have, such as Metro, HDFC, Kotak, etc. You can see our product portfolio. We have a wide range of portfolio of including the hardware and software products. You can observe one of the solution which is related to GST and finance related product as well. So basically, this is a product that you can file your GST taxes in an automated way. So we have one of the solution which we are providing to the organizations to simplify their GST filing. So I will quickly launch something on your screens, guys. This is a poll to give you an introduction about FlowTax. FlowTax is basically a GST automation platform which you can file your GST. So we will give you a free demo of our product. So we will explain you exactly how to automate your GST profile, how to automate GST filing, reconciliation, invoice, e-way bill, etc. To know more about how to automate your GST, you can click on yes, so that we will give you a free demo. The poll is on your screens, guys. So click on yes, reach out to me so that we will provide you a free demo on how to automate your GST. We will wait for some time till other people get chance to take the demo. We have already seen good number of attendees. Basically, FlowTax is a platform which we are offering to the organizations to simplify the GST. We can automate GST filing, GST reconciliation, e-invoice, e-way bill, and IMS. To know more about our platform, you can click on yes, reach out to me in the poll box so that we will contact you to schedule a demo. It's completely free demo. You can know how to automate your GSTs in your organization so that you can refer to your management. Okay, I'll be ending the poll for now. If anyone is interested, they can also reach out to me at pawan.sahu@websol.com. Also, there will be a survey form at the end of the webinar. You can fill and you can get your demo there as well. So I would like to introduce our speaker of the day, Mr. Rakela sir. Mr. Rakela Prakash Rao is an independent indirect tax advocate. He graduated in 1989 from BITS Pilani in electrical and electronics engineering. He is also a gold medal holder who completed LLB from Andhra University in the year of 2001. And he has more than 27 years of experience in the field of indirect taxes with exposure to government, consultancy, and industries like auto and pharma. It's an absolute pleasure to have you here, sir. I'm sure audience also looking forward to hear directly from you.
Thank you,
Over to you,
Pawan.
sir.
Thank you, Pawan. Thanks for all those who have joined today's session. It's about input tax credit under GST and what are the settled case laws that we may be looking at the law in a way, but how the courts are interpreting and what is the practical considerations that you need to keep it in mind in order to get the best advantage of the input tax credit, which is a potent area of litigation with the department for many years to come. So that is the topic that we are taking up today. So let us go from the fundamentals. What is the input tax credit eligibility and what are the definitions? The supply of goods or services is leviable to the tax under the GST. Every kind of mobile property other than money and securities is defined as goods, and anything other than goods, money and securities is defined as services. And goods other than capital goods used in the course or furtherance of business is what is the inputs. And goods capitalized in the books and used in the business is termed as capital goods. And credit of input tax, whether it be central tax, state tax, or integrated tax, is what is the ITC. So ITC on capital goods under the GST, that capital goods only for personal use and only for exempted sales, that capital goods, that there will be no ITC. And normal taxable sales including the zero rated sales, that ITC is eligible partly for personal and exempted, and partly for normal sales. You have to calculate the pro rata input tax credit on the capital goods in order to avail it. These are the fundamental things which we all know. To set the context, I'm just briefing you about it. So I may be going a bit in rush, but you can always raise your queries. That there is a Q&A box. Please post your queries there so that it will be easy for us. That we will be taking up all the questions and I'll answer all your questions at the end of the session. Next slide, please. So taxable supply has been defined under section 2108 of the CGST Act. It refers to any supply of goods or services that is subject to tax liability under this act. GST applies to both goods and services that meet this taxability criteria, forming the foundation for the input tax credit eligibility. The classification framework, goods and services, which we have already discussed, and the some of the key terms that you need to keep it in is supply encompasses the composite supply, continuous supply, mixed supply, exempt supply, non-taxable supply, and the ITC implications for each of these supplies is going to be different, that we need to keep it in mind. Next slide, please. So input goods, goods used or intended for business operations excluding capital goods. Input services, services consumed in the course or furtherance of the business. Capital goods is validated against the PAN database, and assets capitalized in the books used for the business purpose. ISD credits, minimum two promoters and two partners should be there, and the credits received from the input service distributor. Sorry, this minimum two promoters and two partners is not relevant in this. ISC credit is the credit received from the input service distributor. So 2 of 62 of CGST Act defines the what is input tax, and it is a tax charged on the supplies made to a registered person, including the IGST on imports, tax under reverse charge mechanism, tax payable under various GST provisions, but excludes the composition levy of taxes, because composition levy, whatever is the tax paid, cannot be availed as an input credit, so it has been consciously excluded. Next slide, please. I think power.
Uh, Guys, I have a poll for you to launch on the screen. The poll is on the screen, guys. I'll read out for you. Exempt supplies under GST include which of the following: nil rated supplies, non-taxable supplies like alcohol, like liquor, wholly exempt supplies, all of the above. We can see good number of participation in the polls. I'm sure audience are more active listening to the webinar. Also, audience, if you have any questions, you can type in a chat box, or the better to keep your questions in the Q&A box that the platform is providing. We will have a dedicated Q&A session at the end of the webinar. We will take up all the questions from you. Also, if you want to directly talk with sir, if you want to explain your question, you can You can raise your hand so that I will provide you the access to directly talk. Over to you, sir.
Yeah. So what are the required documentation and exempt supply frameworks? See, what are the important documents for availing the input tax credit is you can take ITC on a tax invoice, on a debit note, on ISD invoice, on a bill of entry, or a self invoice under the RCM. All these are going to be the documents which are going to be relevant for you. And exempt supply categories are nil rate supplies, items specifically rated at 0% in the official rate notifications, wholly exempt supplies, supplies covered under the exemption notifications, non-taxable supplies like alcoholic liquor for human consumption and petroleum products, and which are outside the GST scope. These are all non-taxable supplies. So these are the various categories because that ITC working on this is going to operate in a different way. So we need to know the difference between all these kind of supplies: nil rate of supply, wholly exempt supply, non-taxable supply. Non-taxable supply, you are not supposed to avail any input tax credit. If it is a nil rate, then the 0%, zero is also a rate wherein the input tax credit is going to be available. Wholly exempt means that you should not be availing the input tax credit. So that difference has to be kept in mind. Next slide, please. Yeah. So there are some important conditions which you need to keep it in mind. That Section 16 is the key for the input tax credit under the CGST Act. So you should hold a valid invoice or a debit note or a tax paying document from a registered supplier. And then the supplier has paid the tax either in cash or through ITC utilization. And supply is received or deemed received by the recipient, and then invoice details are declared by the supplier in the GSTR1, and supplier filed the 3B, and payment is made within 180 days, and details are reflected in the recipient's GSTR2A, and the goods are meant for the business purposes. And if the goods are received in lots, then after receiving the last shipment only you will be able to take the credit, and the documentation for the goods movement is also maintained. So these are some 10 conditions which you need to keep it always in mind. But among these conditions, see the document position. Having a valid invoice in your hand, once your supplies are received against the document and you are in receipt of the document, then there is no need to have a physical document in hand, because this is a digital era. So the transactions and the documentation can be in the digital mode also. So even if you have received your invoice by way of a soft copy, then it is also a valid position only. So that is something which you can make sure at your end. Point number one. Point number two, invoice details are declared by the supplier in their GSTR1 is not something which is there in your hands. And details are reflected in the recipient's 2A for verification, provided that the supplier has uploaded the return, that you will be able to see this. Tax discharge by the supplier is not something which is there in your hands. Return filing by your supplier is not something which is there in your hands. Whether goods are meant for the business purposes is something that you can take a call. Receipt confirmation is something that you will be doing. Payment timelines of 180 days, that you can make sure that it is going to be paid. And when goods are received in lots, that you will make sure that the credit is going to be availed only after the receipt of the last consignment, last part of the consignment. And then transport evidence also you can keep it. So there are certain things which are not in your hands, which are always troubling the SSEs for availing the input tax credit, such as the supplier's compliance burden, and then supplier making payment to the government of the tax, so that that credit will be available to you. So the courts are interpreting these aspects, these sensitive aspects in different ways, which is the crux of the discussion for today's webinar. So we will go into the details. Next slide, please. So what are the rules for the ITC capital goods? You know it. Full ITC is available for taxable supplies. No ITC for personal. Proportionate ITC for mixed business and personal use. Job work also that you can avail the input tax credit. And then disposal liability upon sale of capital goods with the claimed ITC, pay GST on the higher of, taken 5% per quarter from invoice date and sale price multiplied by the GST rate. Stock calculation method: for capital goods held in stock, ITC for the remaining useful period is computed on a pro rata basis, assuming 60 months useful life from the invoice date. And then special provision for the scrap, that refractory bricks, molds, dies, jigs, and fixtures supplied as scrap may be taxed on transaction value rather than the calculated ITC reversal. All these are some preliminary things that you all know it. Next slide, please. Yeah. So these conditions that we have already discussed, that they are getting repeated over here, but sorry, this title is wrong. 10 critical eligibility conditions. Effective 1st of July, that there is a priority order for ITC utilization. You have to always exhaust your IGST credit first, and then CGST, and if there is something remaining, then the IGST and SGST, then the remaining IGST. But you can't do a cross utilization of CGST against the SGST, or vice versa, SGST against the CGST. So all these permutations and combinations which you will be grappling every day. So you are familiar. Just for recollecting that, I have kept all these things in this slide. Next slide, please. Yeah. So some of the ITC rules for the capital goods: the depreciation conflict, time limits, and exempted supply restrictions, import duties, and the banking companies, that there are certain restrictions for composition dealers, and fresh registration, 30 days window period, transition credits, mixer supply proration, and strategic optimization. These are some certain other things that you need to keep it in mind, which I am not going into detail. But if anybody of you are having any kind of a practical issues, please raise those things that we can discuss at the end of the session. Next slide, please. Yeah. So there are some blocked ITC items are there, like vehicles and transportation. Motor vehicles less than 13 seating capacity, except for further supply training or passenger transport. Vessels or aircraft, rent-a-cab services, servicing and repair of motor vehicles, and then personal consumption, food and beverages, club membership, beauty treatment, health and fitness, life insurance and health insurance, business and construction, works contract services, except for further supply, construction of immovable property on own account, and employees vacation and LTC travel benefits, and then NRIs, and then free samples and gifts, lost and destroyed, stolen, return of goods, fraud cases, restaurant services, CSR expenditures. These are all blocked credits that one needs to keep it in mind. That is all covered under section 17(5)(d). Next slide, please. There are some special provisions and scenarios when you cancel your registration, how to pass on the credit. Manufacturing 11 says that for the natural losses and transition losses, and then timing of the documentation, and allowing the business expenses, and the job work provisions, and the ISD, and then pipelines and telecom towers, and banks and financial institutions. There are certain restrictions under the ITC rules. So please go through them. Any practical issues we will be taking up, surely you don't miss any. Just to give you a comprehensive idea, I am touching upon these issues without going elaborately into it, because that we are going to cover very interesting topic, that how the courts are viewing your input tax eligibility is what is something that we are interested in. Hence I am rushing through these heads, so that it will be easy for you to just refresh them when you go to these slides. Next slide, please. Yeah, recipients face denial of input tax credit when suppliers failed to comply with the statutory obligations, conditions which are entirely beyond the buyer's control. See, the tax charge must be actually paid to the government by the supplier either in cash or through ITC utilization, and the supplier must have furnished the return under Section 39 of the CGST Act. These are two onerous conditions which are causing the trouble in the ITC availment. So Buyers cannot ensure the supplier's compliances, yet face the ITC denial if these conditions fail. And the courts are now interpreting it in different ways. That is what is that we are going to look at now. Next slide, please. Yeah, there are some landmark decisions that I am not going into the details that who had argued the matter, what is the subject, but only I am touching upon what is going to be the highlight and what is the key principle that has been decided in this. The Suncraft Energy, which was decided in 2023, protected the buyers from the ITC denial when supplier defaults if the buyer met all compliance requirements, established that substantive compliance outweighs supplier's post-transaction conduct. Maybe a bit technical. What this decision is saying that when the supplier, when the buyer has met with all the compliance conditions, that he is having a valid invoice in his hand, he is having the movement, evidence of the movement of these goods from the supplier to his premises, and then he made the payment within 180 days, and he is putting the goods for business purposes only. So when whatever the conditions that are implementable at his end, if he has done everything except the fact that whether the supplier has after collecting the tax, whether he has remitted to the government, filed his return, and whether it is reflecting or not, these are the three conditions which he cannot control. If beyond that, but whatever is possible at his end, if he has done it, then the courts have said that the ITC should not be denied in his hands. In Bound Medical India, the ITC was allowed despite minor invoice discrepancies, affirmed the tax liability lies between the supplier and the government, and credit cannot be denied when buyer acts in good faith. Again, it is Suncraft Energy's decision only reiterated in a different context, but more or less the decision, the principle remained the same. Next slide, please. Yeah, there is one case, Vidya Drolia. The Supreme Court ruled that taxpayers eligible for the ITC and GST paid to the registered dealer, even when the supplier's registration was later cancelled, buyer should not suffer for supplier's subsequent defaults. So sometimes it so happens that you receive a supply from somebody, but suddenly the supplier's registration gets cancelled for whatever may be the reasons. You know it best that there are occasions when the authorities are cancelling the registration suo moto, and sometimes that they are cancelling the registration with a back date also. In such a scenario, whether you will be entitled for the credit, because all through when we are reading the definitions in the initial slides, we told that you should have received the tax invoice from a registered supplier. The term registered supplier means his registration should be valid at the time when you are availing the credit. But suddenly, because of some reasons, if his registration has been cancelled with a backdated cancellation happens, and the invoice happens to be belonging to that period, then whether the ITC is going to be denied in your hands, the Supreme Court itself has said that you cannot punish the buyer, because when he had received it, at that time the registration was valid. Later, if it has been suspended for some reasons, then the buyer can't be penalized for it. Similarly, in the RT Infotech Allahabad decision, quashed the ITC denial order based solely on selling dealers' failure to deposit the tax, establishing that buyer compliance alone should determine the ITC eligibility. This is something what was decided in Suncraft only. The same spirit has been reiterated in this decision also by this High Court. And similarly, the taxpayers must be allowed to rectify the bona fide errors to avoid ITC denial. Procedural lapses should not override substantive rights when corrections are possible, is something which has been decided in the bridge systems in 2025. Next slide, please. Yeah, I think now it's Pawan, your time.
Let's start a poll, guys. This poll is quite different. I have placed the link in the chat box. You can click on the chat box and you can click on a link from the chat box. You'll be directed to the poll directly, which is happening in our LinkedIn. Just click the link in the chat box and you'll be directed to the poll. I'll be reading out for you. According to the Supreme Court's interpretation, ITC can be denied only when supplier defaults, buyer fails statutory conditions, porter mismatch, notice issued. Click the link in the chat box and you will be directed to the poll, guys. Also, to remind you, the page that we have conducted the poll, you can follow our page because most of the webinars that we do, we announce in the LinkedIn page itself. We post regular GST updates, trends that are happening. We usually provide some materials provided related to GST. Everything we post in Flowtax page. You can follow our Flowtax page for more updates on webinars. Once you complete the webinar, you can just follow Flowtax page so that you will be getting updated on the webinar and many other GST related updates. Tejaswini, you can click on the link so that you'll be directly directed to the poll. If you already have the LinkedIn in your device, it will be easier for you. It may ask for LinkedIn login, but if it is already login, you can directly answer your poll. Just click the link in the chat box so that you'll be directed to the poll. Also, to remind you, audience, follow our Flowtax page for more updates on our upcoming webinars. And also, we will be providing more updates related to GST and the Gaurav Sharma, you are giving spoilers to the audience. Yeah. Okay, I think you are messaging to me. Yeah, that is the answer, Gaurav Sharma. Mega, if you have any question, you can type in a chat box. If you directly want to speak with sir, we will provide you at the end of the webinar in a Q&A session, dedicated Q&A session that we have. If you want to clarify any smaller doubts, you can type in a chat box. Or else you can directly message me through the chat box. Please make sure to follow our page in LinkedIn, audience, so that you will get more updates related to GST. We usually provide webinar updates and all the seminars that we provide. We have a community of more than 1,000 people who are practicing GST professionals, so that you will get chance to meet and regularly talk with these people to share your knowledges. Over to you, sir.
Yeah. So this is one other decision, Shantikiran. The Supreme Court in a landmark ruling established the comprehensive protection for genuine purchasing dealers in this particular case, where ITC cannot be denied to bona fide dealers merely because selling dealer failed to deposit the tax with the government. And the decision under the Delhi VAT laws explicitly applies to the GST, creating binding precedent across India's indirect tax landscape. And it had supported the President D.Y. Bethel Enterprises 2021 decision that culpability cannot transfer to bona fide taxpayers for suppliers' defaults. So, in the Uttarakhand High Court also, in Subhas Singh case, said that ITC is a statutory right. The purchasing dealer cannot be left at the mercy of the selling dealer's compliance failures. So, this is what is the principle that was upheld in the Shanti Kiran, wherein that they said that the ITC cannot be denied to bona fide dealers the important key word is a bona fide dealer. So who is a bona fide dealer? That you have religiously observed all the conditions of ITC, whatever is possible in your hands, except the conditions which are also casted on you, like the buyer's complaints burden also has been cast as one of the conditions. So except for that, the sellers complaints, not buyers. Yeah, as a buyer, you have taken all the care at your end, but you cannot compel your supplier to comply with the law. So for his fault, you should not be penalized. That principle has been upheld in Shantikiran's decision. Next slide, please. See, there are many high courts which have agreed with this. They're like Sri Sai Traders in Allahabad, LGW, Calcutta, and then Tarapur, the Chennai decision. Next slide, please. Yeah. So the comprehensive judicial framework that RT Infotech that we have discussed already, then Vinayaka agencies, once the purchaser pays the tax to the supplier, ITC claim is valid regardless of the supplies, is what the Chennai court has said. And DI agencies, bona fide and genuine ITC cannot be denied merely because amount is not reflected in 2A. Supplier's remittance failure is not purchaser's responsibility. That is what was held in DI agencies Kerala decision also. Next slide, please. So this is one decision which has actually set the context of the e-com Gill coffee, which we have discussed in our earlier webinars also when we have discussed about ITC at length. So in this decision that they have, the Supreme Court has come out with certain requirements. They said like there should be for availing the input tax credit, you need to have enough documentation at your end, like your name and address of the selling dealer, details of the delivery vehicle, payment of freight charges, delivery acknowledgement, valid tax invoice, and payment particulars in the banking records are to be kept at your end in order to have a strong claim against the ITC. So on West Merchandise, the Delhi High Court has read down the DVAT Act. The demand is unsustainable against the bona fide purchasers transacting with a registered dealer. Department must pursue the defaulting seller directly and not deny the purchaser ITC unless collusion evidence exists under Section 40A. This was the decision made under the Delhi VAT Act, but nevertheless it is relevant. Similarly, in the KVAT Act, this Ecom Guild decision has been given under the erstwhile KVAT Act, but the principle holds good even in the GST also. That is why that these decisions are also mentioned over here. Next slide, please. Yeah. Link the invoice payment to GST or 2-year reflection. Hold the GST portion until the ITC visibility. Balance cash flow with ITC security. And then in vendor management, blacklist the non-compliant vendors and monitor the supplier return filing pattern and conduct periodical compliance audits, and support the service sector vendors with filing and balance ITC production with vendor relationship. Recognize the advance payment scenarios. These are some of the safeguards. If you take it, your ITC is going to be protected. One of the persons is asking the question, how best I can secure my ITC. So these are some of the things that you should be knowledgeable enough about the ITC availment, eligibility conditions and all that. And second thing, that you should be diligent enough to keep all the documents and whatever is possible in your hands to keep it ready, so that you will not be questioned by the department for defaulting on any of these conditions and to deny your ITC in your hands. So once you have taken care at your end, then for the non-compliance of your supplier, you will not be penalized by taking shelter under these rules. Next slide, please.
We are done with the slides.
Yeah, we are done with slides, but there is something that I wanted to summarize. Maybe that we were a little fast in making this presentation. The whole idea of this webinar is just to bring familiarity to you with all the terms that are involved in availing the input tax credit under the GST environment. That is the first thing that we wanted to see. The second aspect is what are the key considerations that you have to keep in mind. Then the third angle is that how the courts are viewing. I will tell you, some of the courts are holding the position that unless the government has received the tax paid, that cannot be sought as a input credit in the hands of the buyer. That is what some of the courts have held. So what they are saying indirectly is, adhering to the law, the way it has been framed, they say that unless the supplier who had supplied you the goods, after you making the payment within the 180 days time frame, once he collects his tax portion and when he remits and files his return, and that amount reflects in your returns, then only you will be able to take the credit. But all this care that as a buyer, because that you wanted to take the credit, so hence you have to take care of all these conditions to be met at your end, then only ITC is good in your hands, is what is the restricted view some courts have taken. So in all those decisions, the court's view is that ITC is not a vested right. It is something for which that you have to struggle a bit. It is not the responsibility of the government alone that the ITC chain is protected end to end. So you have to play a definite role in it. That's how the courts have taken a very restricted view about it. But differing from this kind of a view, because that in some of the VAT decisions, particularly under KVAT, Karnataka VAT, Delhi VAT, and in some other states also, that when the issues have come up before the courts, then the courts have deviated from this settled restricted view, and what they've told that the law should be made in such a way that those who are bona fide buyers should not be penalized for the default of the supplier. Hence, all those bona fide buyers who have got the invoice, valid invoice in their hands, and within the prescribed time limit only that they have made the payment, and then they are using these goods for their legitimate business purposes and hence availing the credit. And what is not in their hands is to compel their supplier, after collecting the money towards the consideration of the goods or services along with the tax charged thereon, if the supplier fails to remit such a tax to the government and fails to file the return at his end, then for those reasons, a bona fide buyer cannot be denied the ITC. So they said that there should be a clear-cut demarcation between a bona fide buyer and somebody who had colluded with fraudsters. So once they have brought in this kind of an interpretation, what is happening is that largely, if you are diligent, then your ITC is going to be safe in your hands. But if you are not a bona fide buyer and for any reasons that you seem to be colliding with the fraudsters, then definitely ITC is going to be questioned. That's how that they have brought in this kind of a distinction, which is now is going to be the prevailing trend in the GST. Now that many cases are there in the GST, which are yet to be taken up by the GSTATs. Recently, the members were announced largely from the central government. Some of the states have not yet appointed the GSTAT members, but once that happens, and maybe the GSTAT is going to commence and any day. Already the main GSTAT principal bench at Delhi has issued their first order. Many people might have seen that. So the other GSTATs are also going to take up the cases, but largely I think because the Supreme Court's decisions were there also, wherein that they have brought to this understanding that there should be two different classes of buyers. One, a bona fide, and the second one is non-bona fide buyers. So the bona fide buyers' rights are to be preserved by reading down the section 16(2). That is what exactly some time ago the Tripura High Court has done by bringing the spirit of Suncraft, Shantikiran, Quest merchandising, all these decisions they were touched upon while giving their decision by the Tripura High Court, wherein that they have brought this clear distinction that a bona fide buyer's rights cannot be denied and he should not be kept on par with a non-bona fide buyers, because the law did not provide a mechanism wherein that you can monitor whether your supplier has collected the tax, remitted to the government, filed his returns. That mechanism was not something which is there in your hands. So for the fault of your supplier, the buyer should not be denied the input tax credit when he has taken all the care that is possible at his end. So that is what is the conclusion that is coming out. Now even the courts are also going to go in this mood only. Even the GSTAT also, the direction is clear, we believe, unless there is some surprise which is thrown with a valid reason. But established norms, I don't think that anybody can deviate. So hence we hope that henceforth the GST journey is going to be smoother and better. But mind you, sir, that it is a digital era and the complexities are more, and when the volumes are also becoming more and more, monitoring at a granular level becomes a Herculean task. That is where that you must, whether you are a big company, small company, MSME, or whatever it is, multi-locational or located at only one place, I urge strongly that you should have some ASP, GSP at your end. I am not advertising for Websol, but definitely you give them a chance, see that whether it suits your requirement or not, and whether you need any kind of a modifications or customizations at your end. Websol will be more than happy to render those services to you. But definitely you should embrace the technology and you should be falling in pace with the government, because government is making large technological strides by bringing in a lot of automation into their mechanism. So unless you keep pace with them, it will be difficult for you when you are going to face audits in future, because the audits are happening after a considerable lapse of time, and then they will ask you, show me the evidence that these goods have moved from your supplier to your place. So how are you going to keep track that how many checkposts the vehicle has crossed and what is the vehicle number, whether it is actually a lorry or not a moped, all these things after 5 years. So pulling out this data from your archives is going to be a Herculean task. Unless you have automation at your end, it is going to be a difficult exercise for you. So that is the reason I am urging time and again people to embrace technology, go digital, go for an automation. It is not going to cost you much, but definitely your energies can be spared for better things in your organizations. With these words, I conclude my presentation today. If anybody wants any detailed discussion on any of these case laws or any other points, we are open. And in your question and answers, that you need not restrict yourself for ITC, that any questions that you have, I am more than happy to answer them. But let me see that there are one or two queries which were raised during this webinar chat also, before taking up the Q&A separately. What is the best way to safeguard our ITC? Somebody had asked. So I've already answered. You should be thorough with the law. What are the modifications and changes that were brought from time to time? So which law applies to which period? This is very important. And then once you are updated with all that knowledge, then at your end, you be compliant. What whatever is possible in your hands, that you should do it. And after that, if something is happening, then take the help of these case laws which suit your version, and then you present the case to the authorities so that you can safeguard your input tax credit. Somebody had raised a question. He had amended the bills relating to October month due to a mismatch in the bill number in the month of November GSTR 3B. There is no difference in the tax liability. The recipient rejected the same in the IMS, but in December, the amount is added to my actual sales and increases the tax liability. Is it correct? Because it is not correct only, the system has taken this procedure. See, whenever you are doing the amendment after issuance of the invoice, you cannot do it at your end. You have to cancel the earlier invoice by issuing a debit note and then reissuing it. Here, the problem is not about the tax, but it is about some number mismatch. But even then also, the only method that is available, because All these invoicing system is now in the automation. So in the process, once the document is issued to the other end and the document is final. So if you want to make any changes, you cannot make at your end sumoto. You have to intimate it by a procedure. So a invoice can be nullified by a credit note, and subsequently you can reissue an invoice with a fresh date. That is the method. If you have followed, then it would not have increased your tax liability. So because of this only, you have got this problem. And then if you hold GST payments of MSME, any liability, definitely, sir, MSMEs have got their rights protected under the law. The amounts to MSME are to be paid within 45 days. You cannot hold for 180 days. But if you have got any kind of a reason for holding back their payments, then you should pursue within that stipulated timeline and settle the matter. But once you cross the deadline, then you will face the music, sir, because MSMEs are danger zones. That doesn't mean that I am discouraging, but when you are dealing with them, you have to be very careful that you have to make the payment or settle your issue within the fixed timeline. 45 days is the payment time given to the MSMEs. You have to adhere to that. If you have made the sale invoice to an incorrect customer after e-invoicing, we have raised a credit note against the wrongly issued invoice, but the recipient rejected the credit note as well as the tax invoice in their IMS, but a credit note added in my output tax liability. So how we can resolve this issue? Please suggest. See, he might have rejected the invoice. After that, you have issued the credit note. Even the credit note was rejected. But at your end, the invoices get already got nullified. Hence, it will not increase your output tax liability. But you have to tell him that this fault has happened, hence you cannot simply reject it. The best course for it is to accept both so that it gets nullified, the tax liability gets nullified. So this is something that you have to take it up with your supply chain team, and then you have to resolve it. Otherwise, the system can't understand your practical difficulty. So we have to understand that you are dealing with a machine. So the way the machine has been programmed, that you have to structure your transactions to suit that requirement only. So you have to take it up with your recipient, and then you have to ask him to accept it so that your tax liability is not going to be increased. What if import bill of entry is not reflecting in 2A but have all documents of bill of entry invoice? Can ITC be availed or not? Bill of entry, if it is not getting reflected, that you have to check with your customs and people also, sir. But you cannot take ITC simply because you have a document unless it is reflected in the 2A, because at the time of reconciliations, when the difference is visible, then the authorities are going to deny the credit, then they are going to subject you to the further issues. It's better that you take it up that with the ice gate portal or your CHA or whatever is the reason that you have to find out, and then you have to sort it out. Then another very allowed. Yeah, allowed for hold GST in MSME payment due to non-compliance of filing the GST returns as per. Yeah, if see if there is a valid reason, better that you get all these things in record, sir. MSME, when you are holding the payment, this is what I told you, that you have to have a solid record that why you are holding back the payment. If it is the fault, he is defaulting in filing the returns, definitely you have got a point, but it should be on record. If supplier reported in B2C instead of B2B because of his mistake in 2B, we are not able to take the ITC. Can I take ITC even if something is not reflecting in 2B? Please don't take the credit. Please try to sort out the matter with your supplier by doing amendments and all. But if you suo moto take any credit, you will be landing up in a mess. See, you are an MSME and you are not getting your payments from the government within 45 days, then you have to take it up under the MSME Act, sir, because that is the only recourse that is available to you. That if the government itself is not honoring their own act, then what to say? Please explain about the amendment option in GSTR1. After generating the e-invoice, can we still do amendments if any correction is there? See, sir, it is very clear. Once in the e-invoice is generated, then you cannot do anything, but you have to go by the procedure of cancelling that invoice by way of a credit note and again reissuing the invoices. There is no other go. And then please explain about the amendments option I told. In IMS rejected transaction, can we take the action against in IMS as accepted from rejected? IMS rejected transaction. See, IMS rejection always happens because if the other end the person has taken an action, then you have to have a reaction. But once he has rejected, no, you can re-forward it. But beyond that, you have to pick up the phone, talk to him. What is the reason? Sort out his problem, and again re-forward so that he can accept or reject or keep it on hold. That is the only thing. But you cannot dictate what he has to do. If that is the case, you always better talk to him. If there is any small corrections that are required, but despite of that, he can avail the credit and it can be passed through, then you have to have a dialogue. IMS is a platform wherein that it is encouraging the dialogue between the buyer and seller. So you have to enter into a dialogue, discuss the issue, sort it out, and then see that it goes smoothly. Suppose ITC is getting carried forward for more than 2 years without utilization, are we still eligible to claim the same? So I do not know what is the peculiar reason for which you are carrying forward this ITC, but whether it is eligible ITC or not, that you check. But if everything is fine, then ITC you can continue to hold. No problem. You can utilize it even in future. When amendment, we can use GSTR1 or GSTR1A. What is this amendment you are talking about? But yes, once the GSTR1 is already up after 10th of the subsequent month, the only recourse is to resort to GSTR1A only. One can't be touched again and again. So that completes all the queries that are posed in the chat box. Now I am taking up the queries in the Q&A.
Sir, let's take one question from the audience who raised the hands.
Yeah, in IMS, how many months we can put the ITC in pending? There is nothing, sir. You can keep it pending for any amount of time. The only thing is that the more that you keep pending, then you only will be having a trouble to avail the input tax credit at a later point of a time. Yeah, so that
Mr.
completes
Megha,
the chat queries. So somebody had raised the hand. Yeah, I can.
Mr. Megha, you can enable your mic and you can speak. Megha, you can unmute. Yes, Megha.
I don't think that she is unmuting herself. So in order to save time, that I'm just going through the Q&A. As and when she is ready, I can answer her. If some purchase invoices were earlier reported in GSTR 3B but were missed in GSTR 9, can those invoices be considered while assessing the tax in future in case of any scrutiny by the department under Section 61? See, sir, once it is reported in 3B and if you have missed it in GSTR 9, it is your fault. So definitely, yes, the department can assess them to tax in future because in the GST, it is not that you will be paying the tax later. Once it is considered in 3B, then you must have paid it. But if you have not reported in 9, it will create reconciliation issues for you. So please take care. Kindly explain treatment of RCM under ISD, how to issue RCM invoice for distributing ISD. See, there's nothing called ISD cannot issue any invoices. So I do not know why you are getting confused between these two concepts. When you are having any kind of an inward supply, please mark my words very carefully when I am answering to you. As inward supply to you, then you should not be giving an ISD registration number. Any RCM supply to you should be to your regular registration. In the regular registration, you receive that RCM invoice, you generate your self invoice, then you take the credit, generate the self invoice, then you transfer the credit to the ISD mechanism. Then ISD will take the credit and ISD will distribute it to the other units. That's how it is. So a RCM invoice cannot be using the ISD GST number. RCM invoice should always be addressed to a regular registration number, and from the regular registration number you complete all your RCM liabilities like generating the self invoice, availing the credit, and then transferring the entire credit to the ISD mechanism. And in the ISD mechanism, then it will distribute that RCM ITC to all the eligible units. That's how it should be done. That is what the law had contemplated. So I think that you are clear. Then, if supplier reported B2C instead of B2B because not able to, that I've told. Yeah. And then, if any supplier company is closed abruptly, short span of time, invoice supplier is valid and ITC can be avoided. Yeah, when he had issued the invoice at that point of a time, if his registration is valid, then you can avail the credit. That is precisely the one of the case laws that I have discussed here. What it told that when I had issued the invoice to you, taxable invoice to you, he is having a registration. But abruptly, because of some reasons, the department has cancelled his registration with a retrospective date. In such a scenario, also, you are eligible to avail the credit. That is what the courts have clarified. So, absolutely no problem. At that point of time, when you had issued the invoice, you should be having a valid registration. That is the only condition. The ITC credit remaining in the electronic credit ledger, timeline for availment of the credit. There is no timeline, sir. You can keep the credit for any length of time till your company operates. We have windmill and roof solar in our company. Electricity generated by windmill and solar is captively consumed for manufacturing taxable goods. Whether ITC for capital expenditure for windmill and solar is eligible. Sir, it is a bit a tricky question, but I will say that prima facie it should be eligible. Because the windmill and solar, you must be capitalizing in your books and then you are putting it to use for your own products only. Hence, it is eligible. But I'll tell you what are the cases that there are mechanisms in which this entire thing operates. Because now the electric supply companies are going by net metering and gross metering kind of methodologies. So whatever is the electricity that you generate, that you cannot directly make use of that electricity. If it is going to be a net metering kind of a scenario, then all the electricity initially that you generate, whatever is required for your operations, that you will be putting it to use. And if you want any further electricity beyond your generation capacity, that you will be drawing from the grid, both you will be making use of for your taxable supplies. And if there is any excess, that only will be going to the grid. Then in another method, whatever you generate will be directly going to the grid, and whatever you use will be drawing from the grid. So at the grid, they will make an account how much that they have taken from you and how much you are consuming, and then they will do the netting of this, and then accordingly they will issue the bill, whether it is payable or receivable, that kind of a scenario. So you got to see whether at any point of a time there is a concept called sale of electricity which is happening to the department, the electric supply companies. So if that is not going to have any kind of an impact, then I think that in principle you can avail the ITC on these goods. But you have to be very careful that what is the mechanism, whether entire electricity produced is directly going to the grid and it is treated as a supply, and after that you are drawing the power from them. If that is the case, then your ITC is going to be in doubt. So you have to evaluate considering all those aspects only, then only you will be right. Otherwise, the department is going to catch you on the wrong foot. ITC on revenue expenditure for windmill and solar is eligible. See, once they are capitalized and you are eligible for availing the input credit, then the revenue expenditures there for towards the repairs and other things also should be eligible, because they become part of your plant and machinery. I sir, is GST paid on sales promotional expenses are eligible for ITC or not? See, anything is going to be eligible for input tax credit provided that you can bring in a business nexus. It is not as per you that there is a business nexus, but it is as per the law that there is a business nexus. If you are able to establish these sales promotional activities are for furtherance of your business, then certainly it is going to be eligible. Then the last question is when MSME vendor has agreed for a payment terms of 90 based on agreed terms mutually, still 45. See, this 45 is something which is mandated under the law. 90 and all are negotiated things. Hence, if he is not going to make an issue or book a case against you, then everything is fine. See, sir, if you and your supplier are okay with all the terms and conditions, government cannot bring in their own legislation. But unfortunately, in the GST, that is exactly what has happened when they have prescribed a time limit of 180 days for availing the input credit that you should, the seller, the buyer should have made the payment within 180 days. So that is one tricky condition which the government should not have crossed their limits, but they have crossed the boundary and they have put the legislation in place. Hence, you have to play your game within these rules. Yeah, I think that I have answered all the Q&A also. If there are any other further questions or any further discussion on any point, I am open.
Mr. Raghavendra, you can unmute and you can speak.
Yeah, sir. Hello, can you hear me, sir?
Yes, sir.
Yeah, that's what my question was regarding that MSME. All my company is dealing with major of all the supplies of from the MSMEs, and
Yeah.
they're all okay with 90 days and 60 days payment terms.
Sir, if they are not going to book a case against you that you
Yeah.
failed to make the payment within 45 days, it is
Okay.
okay. It is all to do with the issue that if they are
Issues.
going to make it an issue, then you are in a problem. And the law is not going to help you at that point of a time that the commercial arrangement is for 90 days. Because the law says 45, then you have to adhere to the 45 only. Hope I'm clear.
Sir, what if they give a declaration? The supplier gives a
No,
declaration.
whatever it is. See, against the law, you cannot have any declarations and all that.
Okay. Unless there is no dispute, it's okay, right?
Exactly. Unless there is no dispute, there is nothing.
Okay. Okay, sir. That's fine. Thanks.
Mega, you can unmute and speak. Mega, are you online?
She is online, but she is not unmuting herself.
Okay, audience, if you want to ask any questions directly with the sir, you can raise your hands or else you can type in a chat box so that I will start your. Yes, Raghavendra, you can speak now.
Again, sir, continuing that MSME vendor.
Yeah.
So, if in case of services, services rendered by MSME, so it is based on invoice date or the service completion date, what would be the applicable for the due dates?
Anything is invoice date, sir. See, there is a law for issuing of an invoice, right?
Yeah.
So, as per that only, because invoice can be issued in two circumstances. One, either it is a collection of advance payment.
Okay.
And the second one is that even in such a case also, what is the rule says ITC can be availed only on receipt of service. So even if you have made the payment in advance and received the invoice also for it, you cannot avail the ITC unless you receive the services. So that is one. Second thing is that after completion of services within 30 days.
Yeah.
So it is always invoice date.
Usually, like they raise an invoice and it is not received to us or the service is incomplete, but that invoice it will be the backdated. The service would not have completed. There will be service issues.
There are two things here. One, that there is a deficiency in service, but after issuance of an invoice.
Correct.
So if that is the case, then it has to be settled through credit note mechanism.
Credit note mechanism. Okay.
But you cannot say that I have, because that how the government can monitor whether you have received the service or not. The only mechanism is that invoice.
Okay.
So that is the way that you have to look at it. It is not that your date can be anything. Your satisfaction, your surveyor has to come, he has to certify that the service has been rendered to your satisfaction as per your company rules and all. So there will be, so that is going to be a problem. Then in construction industry, no, there is a peculiar case that there is a periodical payments will be there. That if you raise one floor, then 25%, second floor, another 25%. So in such a scenarios also that it is going to be difficult.
Yes.
So it is always invoice date. Invoice once it is there, it is declared, because now everything is e-invoice, no. So the government also comes to know, oh, this is the date, I have to monitor this date. But they cannot come and ask you, oh sir, you have received the service to your satisfaction or not, can I start counting? The government cannot do that, no. So it is always invoice date.
Okay. Yes.
Somebody is asking, limitation of 5 years would be applicable in case of recovery of interest under section. Sir, what is this limitation of 5 years, sir? It is suppression you are talking about, then 5 years. But interest is till you make the payment. Can we reject invoices which are not? Yeah, jolly well, sir. This you have to do. Please, whatever invoice is not in your ID and still it is showing, then you please reject. Is it compulsory to reject invoices which do not belong to us? Yes, please. Because what is not your goods, you should throw them away. Otherwise, that you will be answerable for all of that. Any other question, sir?
Mr. Rahul, you have any clarification on the question?
I'm audible?
Yes, sir.
Yes.
So limitation of 5 years would be applicable in case of recovery of interest under section 50.
No, so interest liability keeps on mounting on you till you make the payment. What is the limitation of 5 years? After 5 years, there will be no interest. You mean to say that?
No. I have paid the tax.
Right. You did not pay the interest.
I have paid the tax.
Right.
Then it is in relation to 18, 17, 18, 18, 19.
Right.
Would the department can ask for recovery?
Of interest?
Yeah.
Yeah, why not? If you have paid the tax within time, there is no interest. But there is a occasion for the interest also, and you paid the tax and you did not pay the interest, then yes, interest you have to pay. You can't escape from the liability that 5 years is over. If that is the case, everybody will pay the tax and we will not pay the interest. And after 5 years, they'll say government to write off. That is not correct, no? Have I answered you? Any other question, sir?
Raghavendra, you can speak. If you are clear with your questions, you can lower your hand. Okay. Anyone else having any questions? Audience? Or else we can close the session.
Okay. So from my end, only one thing, sir, that it has been clarified by the government that there will not be any discussion on indirect taxes in the coming budget. On 1st of February 2026, there will be no discussion on indirect taxes except for some customs related issues. It has been clarified. Hence, there is nothing to worry and nothing to look at as far as indirect taxes are concerned in the upcoming budget. Some customs matters may be there. So that is one clarification. Hence, our next session is not definitely may not be about the budget and the changes that they have proposed and all, because there is nothing that is going to be. So any topic that you people are interested, that I will be more than happy. You can communicate your choice of topics to Mr. Pawan. Then we will decide on which is the best for catering to the majority. Like today, if majority of the people are going to be benefited, then we'll also be happy that our efforts are giving some results. With this note, I thank you everyone, and this new year, the first webinar with you. It was a very happy occasion, and thank you to one and all.
Audience, thank you, sir. Thank you so much for very insightful webinar. Also, audience, our next session, if you want to give any suggestions, once you end the webinar, you will have a form to fill your feedback on the webinar so that you can give your suggestions for the next webinar. We will be conducting these webinars every month, once or twice. So you can attend these webinars. We will be posting all the webinar details and the dates in our Flotax LinkedIn page. Please make sure to follow our Flotax LinkedIn page. Also, I will be providing you the webinar recording and also the webinar PPT that we have presented now through emails after the webinar. So keep track on that and take your notes for that. Thank you so much, audience. You are very active and you have given so many questions, and it was very insightful webinar. Thank you, audience.